Now, Tom O'Brien.
Hi, everybody. Basil Chapman sitting in for Tom O'Brien. Tom O'Brien and Steve Rhodes are on the road. They're on their Go Long America tour, and in fact, it isn't just a tour. Of course, what it is those cities that had the greatest number of buyers of Tom's fabulous book, his latest one, and that is The Art of Timing the Trade. Those are the cities that have the pleasure of Tom O'Brien visiting and Steve Rhodes giving a seminar, 1.5 hours each, highly just fantastically successful last night, I believe, I'm told. And tonight they will be in Spokane, I believe. And tomorrow night, San Francisco. Go to the front page of TFNN. Check it out. It is really, this is something, it's free. Can you believe? This is what you would normally pay for. It is free. And it's something that I strongly recommend. If you want to have knowledge that you can use to help you become a better trader, a better thinker, a person who's able to value information, to be able to sift through information and siphon out just the very best, to be able to add it to your own techniques, these two seminars are going to be fantastic, and that's with Tom and Steve. So it's my pleasure. I'm part of the TFNN team, Basil Chapman. My service is the opening call. It's just a daily newsletter that comes out every day by 8:35. I've started sending my charts at about 7 o'clock in the morning. I show the Dow chart. I show the parameters for the Dow, what it is in the Chapman wave we're looking for, where we're on the short term, the intermediate term, longer term. I usually show 3 time frames of all the charts that we're looking at. That's just like you can see right here in TFNN Tiger 1. This left side is the daily chart with all the notation of the Chapman wave. You can see a rising wedge formation. What is that? It is 2 lines that are narrowing and going towards an apex. That's all it is, just 2 simple lines. A number 2 chart right here in the middle, that is the weekly chart. Look at that beautiful V-shaped pattern. Number 3 is the monthly chart. Look at this. This is of the Dow. The high was 14,198 in October 2007, plunges down to 6,469. To a trough E. I'm not going to go too much into the troughs other than to talk about a webinar that I'm giving a week from tonight. It is on the Chapman wave, the core of the Chapman wave, how you can use letters, just the simple letters of an A, a B, a C, and a D. Yes, there are the letters, but those 4 letters are incredible tools, and I'm going to show you in a few minutes what it does. In fact, I'll show right now. The Dow closed today at 12,938, down 27. From the low in the monthly chart of 6,469, you went to a peak E. That's the first peak at 10,729 for a 65% gain. From the low, it formed what I call in the Chapman wave a stalk leg formation. A pullback, then went to 11,258, 69% gain, to a peak B. Pull back to 96.14. That's the body. And then what does it do? It goes to leg C. That's peak C. When it hits 12,391, a 91% gain, that's called the neck. Then it makes the head, it goes to 12,876 for a 99% gain. It's a little squashed. I'm going to make it a little wider right there. And it pulls back down to 10,404. That was the that was the October low, and now it started another leg up, and I call this leg because it's made a new recovery high above the 12,876. It went to 13,005 just, 2 days ago, yesterday? That implies that it's leg E. It could turn out to be a brand new A, but I'm very conservative in the wave count. E is when you've got to be a little bit cautious. And what does it say? It says when you get to a double top, especially in a V formation, unless you power through the previous left side high of 12,876 in the Dow. We've already gone to 13,005, but if you really need to get to the 13,100s to power through, it says you've got to be a little bit cautious. To go with that cautiousness, what do we have? We have in the Chapman wave a leg E, which is now a peak E in the daily chart. The stochastic is still very strong. These are the technical tools I use. Here, this one with the yellow and red line you can see in Tiger TV, that is the daily MACD, the moving average convergence divergence, and it's deflecting low. It says be a little careful because we could have a pullback that could pull back, could take you down. If it's more than a pullback, if we close under 12,800, if the Dow closes under 12,800 in the next, I'd say in the next 2 sessions, then there's a good chance we're in a consolidation. The consolidation is going to take us pretty much down to the 12,529 low of January the 30th. Can you believe in just 2 months we've gone this high? It's an incredible move. You're going to expect some kind of a pullback, but this is what's so fascinating about it. If we break above this trend line, above this line, I usually put another line in. These are techniques. I'll talk about a couple of these techniques when I do the webinar a week from tomorrow night. It's free. It's at 6:30. Go to the front page of TNN. Sign in because we want to know how many people are going to be there so we can have all of our technical resources here at TFNN ready for it. But what I normally do, I didn't want to make it too crowded, but I'll just do this for now and then I'm going to take it away. Normally in the Chapman wave, there's a technique that I use which is called the inside track, and that goes red. You will see that whenever the Dow has been into this inside track, it's pulled back quite sharply. I should say it's pulled back sharply, but it might be sharply in relation to a day or two. It's never gone from within just 3, 4, 5 days. On the 6th day, we've gone back to a new recovery high. Now, why am I a little bit cautious right here? Because the MACD is turning down and deflecting. The stochastic is still very strong at 88%. Let's go to the S&P. I'll run the numbers now, and then I'm going to take your calls at 877-927-6648, just as Tom does. Now, the S&P has made a peak D. A peak D with a doji from yesterday and a close below the doji says you've got at least 2 days of downward movement. Even if on the second day you pull back and then recover. So you've got to be a little bit cautious. But look, the MACD is deflected lower here as well. Stochastic's still strong, but the little green line that you might be able to see, that's unbalanced volume. Remember, we all have our different techniques here at TFNN. Tom loves to use volume. He's used it for years and years very successfully. I use unbalanced volume. This is like the classic Granville methodology. And that's saying that both in the data, you've got a little V-shape inversion here. So the up channel line, it's not a rising, narrowing wedge. This is a pure up channel, says that right now we can look at this very cleanly and say if the S&P, which closed down 4.55 at 1357, closes below 1340, let's call it 1338 in the next 2 days, the consolidation has begun. But it was really good action today. And if for any reason you close above the high of yesterday, 1367.76, then we're looking at the weekly chart. Now look how beautiful all these overlapping time frames. Look how they work. You're only in leg B in the weekly chart underneath the previous high of 1370.58 back in May of 06, the week of May the 6th. Of 2011. If the S&P in the next 3, 4, 5 days is able to hold any pullback, 1321 is the 9-period exponential moving average, tremendous support. But if there's just a minor consolidation here, and believe me, there are folks that have missed this entire move and are wanting to get back in. Now the Dow is just 1,200 points from its all-time high. People are wanting to get in. Let's go to our callers. Let me just run the numbers quickly, as Tom does. I'm going to do this. The Dow was down 27 at 12,938. The S&P was down 455 at 1357. The comp index was down 15 at 2933. We'll look at Apple in a moment. Gold was down. Gold was sharply higher. The GLD is at 172.70. Is it one? At 172.75. This weekly chart is very positive. It's gone out of the up channel. The monthly chart has made a peak F, but is holding the 9-period moving average. And what we've done here, if I had to go to the GCH, you've got a cup and ladle breakout here. That is really positive. But the stochastic and MACD need to catch up. So it might be positive on the daily chart, but the support is most important. 1742 is the gold support. It trades at 1778. It looks to me, this is very interesting. I'm going to go back to the GLD. It looks to me like the GLD in leg B up wants to tackle that very difficult bar of September of last year where the high was 176.86 and then it plunged to 158. That's going to be the challenge. And silver, SLV, I'm just going to go to the silver iShares, broke out. The weekly chart is in leg B. And I'm sorry if it looks a little messy. I'm trying to get to a lot of things before we go to our callers. Yep, leg B in the weekly chart. Monthly chart is still not very good, but that daily chart, the way it broke out, says, I'm not sure. I've got this as a leg A. This is really tough because of this type of consolidation where it went to a rare G. There are different wave counts. All I can say is that if the SLV, the iShares of the Silver Trust, hold 32.85 in the next 2 days and break to 33.70, that 34.01 simple moving average becomes a target immediately, and then 34.35 to 35.10 might be a target. Now let's go to high-grade copper. High-grade copper had a good day, but nothing great. So it's pulled back from its peak D top at 3.9895 from the 9th of February. It went all the way down to 3.69. It needs copper. For me to feel comfortable that copper is really the economic the bellwether around the world, I want to see copper pushing up back into the 390s. Now what's most important is we've got a peak C in the weekly chart. Let me just quickly go to the TLT. I'm going to talk about crude oil because that's very important. But the TLT at 116.69 was up $1.40. So that's telling me that if the TLT climbs to the 118 area, stocks are going to come down. Those three bears, VIXY, Bondi, and Dolly, that's the VIX index, the bonds, and the dollar, they will rally. So we're going to watch this real closely. EUR-USD, that's the currency pair, is holding really nicely, just as the dollar. This is so fascinating. The dollar's holding pretty well, but so is the Euro-USD currency pair. So that's going to be very important. And now I'm just going to touch on crude oil. I'm going to go. Crude oil is in leg C. In the Chapman wave, that says it should go to at least a peak D, so it's still very positive, and it's going to try to tackle that ugly candle of the 6th of May in the weekly chart. High was 114.87, low was 97.95. We'll see if it's able to get into the 107s. If it gets to 107, 108, wow. This could really go high, and that will impact our market. Let's go to Joe in Boston. Hi, Joe. How are you?
Good, Basil. How are you?
Very well, thank you.
Good. I've been watching this IBM for a while now, and it's. What do you think of the setup?
Well, IBM, folks, is closed today at 194.06, up 67. You see, I believe that we're in a rotational market. In a rotational market, it means that some stocks are going to hold up in some sectors. Others are going to fall. You know what? I'm going to talk about this when we get back. We'll be back with Joe in Boston, Chris in San Antonio straight after this, and Basil Chapman sitting in for Tom O'Brien. Tom and Steve will be at the show tonight.